Good day fellow traders and value investors, and welcome back to another video. Today we continue our series start with the A's. In today's video we'll look at NVIDIA and we'll be asking, is NVIDIA a great business but a risky buy at this price? NVIDIA is one of the most talked about stock in the world right now, but popularity doesn't tell us whether a stock is investable, price, risk and timing do. So in this video I'll break down NVIDIA from three angles: the business, the valuation and the chart, so we can separate hype from opportunity. Let's get into it. NVIDIA designs high-performance chips and systems that make computers much faster at complex tasks like artificial intelligence, machine learning, data center workloads, and advanced graphics. We can see a few pretty slides in their non-deal roadshow available on their website. We can see one important thing is that their AI supercomputer were released in 2016, 19, 20, and we'll look at this mainframe in a little bit. You can see as well that NVIDIA projects the AI infrastructure spend to grow exponentially up to 3-4 trillion in 2030, and that spend would go in a data center, in ad generation, model makers, coding and robots. You can see here they project this infrastructure spend to go in quantum compute and physics, chemistry, weather and 5G, etc. They come with the scaling law as well, quite interesting. We'll scroll down and we'll look at one of this mainframe, which is quite interesting. Is like a rack that you can just deliver to the data center, and each one of this unit looks like NVIDIA computer with NVIDIA GPUs. This is a better view of it, a bigger mainframe, and then view from above from one of such unit. We can see NVIDIA GPUs inside, and then servers or platforms that just slide in, and then they get delivered to the data centers. We can also see that machine learning performance training and interference wins is way better than the competition, or outperforming the competition. You can see Google's TPU and others, and then NVIDIA is growing exponentially. And then key business segments for NVIDIA: data center growing 66% year over year, 51 billion. That's GPUs, networking and full AI systems sold to the cloud providers and enterprises. Gaming, that's GeForce GPUs for PCs. Professional visualization, that's workstation GPUs. Automotive, that's chips and software for autonomous driving and robotics. And then finally OEM and others, that's selling GPUs and platforms to smaller device builders. Today NVIDIA is no longer a gaming company, it is no doubt an AI infrastructure company. We'll now switch gears and look at the fundamentals. We'll look at NVIDIA quarterly revenue trend, and we see that revenue has grown from 22 billion in Q4 2024 to 57 billion in the latest quarter. And the latest quarter is Q3 2026 because NVIDIA uses different financial year reporting. One little risk that I see here is that of 57 billion total revenue, 90% came from a single segment, from data center. Looking at the investor presentation, we can see healthy numbers as well, extraordinary numbers, 62% revenue growth quarter over quarter. We can see gross margin pretty much flat, but very high, about 73%. That's characteristic to a company that has a moat. Operating expenses has gone up 38% to 4 billion. Operating income up 62% as well to 37 billion. Net income up 59% to 31 billion. And then diluted EPS 1.3, up 60%. And we can see that the expenses have gone up by 38% to make a net income of 59%. That's pretty healthy. As you can see, NVIDIA is printing cash. So in a traditional manner, we'll look at the financials in trading view as well. Look at the statistics straight away. We can see that quarterly NVIDIA has been growing revenue at a crazy pace, 200, 90, 70, 50, 60% quarterly. Net income has been growing at a crazy pace as well, 600%, 100, 60, 100, 70, 80, 20, and diluted EPS the same. We'll change it to annual. One thing I want to look as well is operating expenses. We can see that the research and development expenses have been growing over the last few years, and that's normal for NVIDIA if it wants to stay relevant. There is a lot of competition in this space, and if they want to be ahead of competition, they have to continuously improve and innovate. We can see healthy revenue over the last 2-3 years, but we see that revenue growth has been down in 2019 and has been pretty much flattish in 2022. So that's something to bear in mind for when the competition will eventually catch up. And likewise, net income has been growing, had a negative growth in 2019 and 2022. Looking at the balance sheet, we see that the cash pile has been growing from 7 billion in 2018 to 43 billion in 2024. That's pretty healthy to see. And we see that net debt is negative, which means that NVIDIA has got more asset than liabilities. Switching to statistics and changing to annually, we can see that NVIDIA is currently selling for a PE of 44 and has been selling as low as 24 in the last 8 years. 7-8 years. Net margin at 56%, but we can see that net margin has been up and down. We can consider this up and down because of their investment in some years they invest and then they reap the benefits from the investment in the research and development in the next few years. So it's pretty normal and very healthy numbers as well. Current ratio well above 1.5 that I like it to see at 447, and debt to equity at 0.09, very low debt as we've seen in the balance sheet. So overall very healthy numbers characteristic to a software growing company, really good to see. However, all this future growth is already priced in and the competition hasn't meaningfully broken pricing power yet. We'll now turn to the intrinsic value calculators. I've used 25% growth rate for NVIDIA for the next 10 years, a more optimistic one, but considering how it's been growing over the last few years, it's not unlikely that it can grow at 25%. NVIDIA's dividend is pretty low, but we have to plug them for the calculation, and we can see that according to Warren Buffett's calculator, NVIDIA's current value is $76 per share. Using Phil Town's calculator, we can see that the NVIDIA is undervalued at the minute. And then we get an overvalued rating using Peter Lynch's calculator. So overall, according to these three calculators, NVIDIA should be trading between $76 and $196, a pretty wide range. And then taking NVIDIA through my 3 case scenarios, I used AI demand as the key driver. In a bear case scenario with EPS growing at 10%, slowing AI spend, more in-house chips and at hyperscalers, we can see earnings per share going up to $6.51 in 5 years, and the stock could be traded at $130.13. In a base case scenario with EPS growing at 20%, continued AI data center demand and moderate diversification, we could see earnings per share going up to $10, and then the stock could be traded at $291.53 in 5 years. And then in a bull case scenario with EPS growing at 30%, strong broad AI adoption and ecosystem dominance, we could see earnings per share of $15 and the stock could be traded at $525.01 in 5 years. Putting these scenarios through my probability weighted table, we can see that over next 5 years we could get 81% return from NVIDIA, and that will make it compounded annually 12.61. Very little dividend as well, so that's about 12-15% from NVIDIA over the next 5 years. That's not too bad if you're happy with this return. And then a few bigger risks that I've identified against NVIDIA. First one is customer concentration risk. I've seen it in 10Q and a few other presentations that a few of their customers are more than 10%. So customer A, they didn't give the numbers, but it's 22%, B 15%, 13, 11%. Watching other YouTube videos, I know that it's not a very good thing to have a single customer representing more than 10% of your revenue, because if that customer cuts costs, then revenue will drop sharply. AI spending is cyclical, even if the trend is real. No doubt that AI investment is massive, but not guaranteed to grow smoothly every quarter. If companies decide to, they will build enough capacity for now. Orders could slow, inventories could rise, and margins could compress. And in 10Q we can see that inventories have grown from 10 billion to 19.8 billion. China and export restrictions. Sales of restricted chips H20 were minimal, 50 million due to regulations. NVIDIA has already taken multi-billion-dollar charges related to China restrictions. China is effectively a closed market for NVIDIA. And finally, the big one, valuation risk. NVIDIA stock price assumes AI demand remains very strong. NVIDIA keeps its technology lead. Competitors don't meaningfully undercut pricing. Any disappointment could lead to sharp stock valuation even if the business remains strong. None of these risks break NVIDIA as a company, but together they absolutely determine how much margin of safety you need as an investor. Now let's bring in the charts, because fundamentals tell us what to own, but charts tell us when to own it. I left the 200 EMA on the chart because if we look back, we can see that the stock has been respecting the 200 moving average and has been bouncing a few times off of it. I'll just zoom in the 2010-11 area. With the rise of cloud technology, it looks like NVIDIA has been going sideways until it took over, and it's been going up since. In about 2019, we see that it came down to the 200 moving average, it bounced off of it, and then it moved further. Over the long term, we can see that the NVIDIA is in a long-term uptrend, and the trend is still strong. However, it's cooling down a little. We can see that MACD is pointing downwards. We can see that the price candlesticks are coming now down to the EMAs, to the faster moving averages. If we look at the support and resistance levels, the more recent one, we can see that it found resistance at the $150 per share area. It failed to break it. It dropped to about $90-$100 per share, and then it took off and it broke through it, and it's still going in an uptrend. We found further resistance at about $200 per share area. Seems like a psychological area, and then it remains to see if it will continue to break through it. We can see that the ATR dots are still below the candlestick, meaning the momentum is still behind the stock, and the stock is likely in an uptrend still. We can see that in June, long 1, long 2, long 3 have printed on the chart as well, and they printed at an average of $160-$170 per share. So we can see that the stock is currently trading at this entry price for my long 1, long 2, long 3. So is NVIDIA a Warren Buffett style investment or a speculative trade? Here's the honest answer. NVIDIA is a Buffett quality business. We've seen the margins high, we've seen the characteristics of a business that has a moat. But the stock can behave like a speculative trade depending on the price you pay. We've seen this on the charts, we've seen how it had these long explosive moves. So the fundamentals say NVIDIA deserves a place on the long-term watch list. The valuation and the chart say discipline matters. NVIDIA isn't speculative. Overpaying for NVIDIA is. Final takeaway is that NVIDIA is not cheap, but it might not be overvalued if earnings continue growing. Its valuation reflects premium growth expectations rather than low prices. The fair value range suggests that market already prices in continued execution. We've seen a fair value between 70 Warren Buffett and 190 from Phil Town, and the 3K scenario like bear to base from 130 to 290. My 3x on the chart as well would be in a range of 270, 280 as well. So very possible. We've seen the growth, we've seen the margins. It just depends if the demand will continue being there. If you enjoyed this breakdown, hit the like and let me know in the comments which stock you'd want me to analyze next on Fundamentals in Motion. Thanks for watching.